Disclaimer. This podcast is for FCA-authorised financial advisors only and is not for retail clients. The views expressed in this content and all other content on this channel are those of the individual speaking and do not constitute financial advice or a recommendation to invest in any product, asset, or strategy, including those discussed in sponsored segments. This content is for educational purposes only. Always do your own research and consider all relevant risks before making any investment decisions.
I was probably in that camp of not quite agnostic, but certainly a skeptic. Hedge funds started to allocate to crypto probably around 2015. 2016 was when I got into it, and in terms of the challenges, mostly been around communication or the lack of communication. Why did so many UK investors lose their money in FTX? Because they didn't have regulated products. Our products are issued from a Swiss company. In Switzerland, we are required to be 100% collateralized. If someone buys a pound worth of our product, we will buy £1 worth of Bitcoin and hold it with a regulated custodian. Bitcoin is very clearly the most mature of those cryptocurrencies, and it has a pretty well-defined use case or future use case, which is.
Welcome to the Bitcoin IFA Podcast. This is a special episode going out in light of the FCA lifting the ban on crypto ETNs last week as we record this. I'm joined today by Duncan Moir, who is the president of 21Shares and previously the head of digital assets at Aberdeen. Welcome, Duncan.
Good morning, Dan. Thank you for having me.
How are you doing today?
Pretty good. It was an interesting, we've had an interesting few days in the crypto market, but things are looking good.
Yeah, absolutely. And we'll touch on that. Before we do, we always ask everyone the same opening question. So everyone's against Bitcoin or crypto until they're for it. So what's your Bitcoin or crypto story?
Good question. I think I was probably in that camp of not quite against it, but certainly a skeptic initially. So like my own personal kind of career journey started in hedge funds. So I was a hedge fund investor for many years, and that's how I discovered crypto. Hedge funds started to allocate to crypto probably around 2015. 2016 was when I got into it, and at the time it was still a very nascent industry, and obviously Bitcoin was the most traded asset, but just it got me thinking, that it was an asset used for trading by these funds, but it had a technology in the background. And so as soon as I started looking at the technology behind it and then the technology behind the other cryptos, I started to see the real value that can come from it. And then that's what I sort of over time dedicated my my career to is understanding the technology, applying it, and now obviously at a place that allows people to kind of get themselves exposed to the economic value of it.
Wow. So in it since 2015, 2016, blimey, I had no idea that hedge funds had been trading this asset and this asset class for a decade. That's really not in the mainstream press.
No, not at all. I mean, hedge funds, and maybe we can talk about it at some point, but like operationally and from a kind of legal perspective, are very well. They're archaic, but they definitely, when it comes to investment strategies and finding ways to make money, they certainly are the early adopters of many asset classes and strategies.
I had no idea. And it's interesting that you touched on the technology aspect, because that's something that I always go into in my trainings with financial advisors, is that this is essentially just new technology. And new technology has a very verifiable history of disrupting the incumbent.
Yeah.
And so, at this point, Bitcoin, for example, has been the best performing asset of the last 16 years. And it is just new technology that's coming along, disrupting the 400-500-year-old financial system that we're currently operating in. And a 0% allocation at this point is essentially gambling that for the first time ever, equities and bonds are going to start to outperform Bitcoin. And it is, as you say, it's just new technology. It's not scary. It's just new. The FCA lifted the ban on crypto, their own self-imposed ban from 2021. They lifted that a few days ago as we record. It will be a week or so when this episode goes out. What has been the main challenge or the opportunities that you found leading up to that ban, and then what's happened subsequently?
Oh golly, big big question. I think in terms of the challenges, it's mostly been around communication, or the lack of communication, frankly, that we've had from the FCA and in part from the London Stock Exchange as well. It would be nice if they really talk to one another a bit more. Not to be overly critical, because we are happy that the ban has been lifted, and the UK can actually move forward with this asset class. But the messaging that came out that the ban was going to be lifted on the 8th of October, and then retail could invest, didn't tell the whole story, right? So the lifting the ban is one thing, but for any product to be available to UK retail, the offering documents, so the prospectus for those products, need to be updated, and that requires FCA approval. It requires London Stock Exchange approval, and unfortunately, the FCA just did not leave enough time to get that done for the 8th of October. So they didn't allow us to submit prospectus until the 25th of September. Normally takes about 3 months to get a prospectus update approved. I think they're going to be much faster this time, given there are very minor changes required. But yeah, there was a bit of a lack of communication and a little bit of a passing the buck sort of between the FCA and the LSE on who was slowing things down. But we're getting there now. I think the issuers have a much clearer idea of what's needed, and I'm hopeful we'll be in the market soon.
That's good to hear. Hopefully so. What's actually contained within a prospectus? Because I've seen that word bandied around a lot over the last week or so.
Yeah.
So what is that document? What does it do? And what's contained within it?
Yeah, sure. So, I mean, a prospectus is a document that tells the investor what they're investing in and what the risks are, in a simple way. But they are pretty meaty documents. It has all the general terms and conditions of the product or the fund. It explains the investment strategy, the risks associated with the investment strategy, and how the issuer of if it's an ETP in this case, or the fund manager for a fund, will behave in certain scenarios. For a retail prospectus, you have to have a lot more information in there, and you also have to explain things in non-technical ways. So if you have technical terms, and it's pretty hard to avoid those, you also need to explain what those technical terms mean. And in the case of exchange-traded notes, we call them ETPs in Europe, but exchange-traded notes in the UK, you have to explain that nuance to the investor. But they are the kind of the fundamental offering document of the product.
Okay, so if I'm understanding that correctly, it's like a much larger version of the KID document.
Significantly. I mean, you'll be looking at 200 pages basically.
Wow.
Which is so this is the challenge, is like, is anybody going to read that really in its entirety? Most investors will not, but it is there, and you will see that it's front loaded with the most critical information explained in a clear way, so that we do expect people will read at least the beginning of it, and that will help them understand what they're investing in.
Wow. Okay. So I'm assuming then, as soon as the FCA announced that they were going to be lifting these bans, you guys all set about producing these prospectuses, and that was back in, I think, on the 6th of July or something like that.
Yeah, we were ready to go day one, to be honest.
So you were ready to go on the 7th of July or whatever it was.
I mean, in fairness, so the UK did allow products to, so the FCA allowed products to list on the London Stock Exchange for professional investors only the year prior. So we were ready we already were listed on the LSE. We were the first to list on the LSE for professional investors. So we had a UK approved prospectus, and really it's a matter of making some minor changes to update it to allow for retail. So it wasn't as big as an undertaking as for some groups who were not on the LSE already. They had to produce an entirely new prospectus.
I see. So someone like BlackRock and IBIT, who were aiming for listing on the 8th of October, I believe. I saw a headline saying that they were aiming for that, but they probably had to produce this document from scratch and submit it to the LSE. after the 23rd of September and shortening this 3-month
Yeah,
lead time. Wow.
exactly. I'm sure they're okay. They're not short of a few lawyers.
Yeah, they've got a couple of people to write it, I'm sure. Yeah. Okay. Well, look, thank you for that background. That's really helpful. And I mean, even if it's just for me, and even if the listeners aren't that interested, but I'm very interested to know what goes into those prospectuses. Something that 21Shares did recently, you submitted feedback to the FCA saying that the proposed retail framework is too restrictive. What do you guys mean by that? And then what sort of changes do you think you would have implemented if you'd have had free reign?
Yeah, sure. So I think there's a few parts to that. I mean, the first is that that the FCA is considering these ETNs to be crypto assets themselves. So they have restrictions on them in terms of the financial promotions, the way that you can promote the product. They're not treating them as the structure of the vehicle, which is an ETN, which we thought was unusual. I mean, the exchanges themselves already have criteria and rules around the underlying asset that can go into the ETNs. Usually, it's the exchange that determines the whether they're the eligibility. So the FCA considering them crypto assets in their own right was unusual, and that then meant that there are some additional steps and hurdles that issuers have to go through if we want to market the products to the UK retail investor, and it adds cost and complexity to the process. So that was one. We felt that they should have been treated like any other ETN. And then the second is really around what is available and the venues that are captured under these new rules. Initially, the FCA in their announcement said it would be products listed on any UK or FCA approved investment exchange. But when, after discussing this with lawyers and with the FCA in more detail, what they actually meant was UK domiciled FCA approved. So the other European major exchanges are also FCA approved. That's why UK investors can buy stocks or ETFs off of them. But they decided to focus this purely on UK domiciled, and of the 4 or 5 UK domiciled exchanges, only the London Stock Exchange offers this. So I think you really limit investor choice by changing the rules to focus purely on a single venue, which is a privately held company. It doesn't seem fair and in the spirit of competition in the market. And obviously the LSE is much newer to crypto ETNs than the European exchanges. And so what they allow, or what they have admitted onto the exchanges, only Bitcoin and Ethereum products. Will European investors have access to a wide range of different assets? And we feel that UK investors should have the same access as a European investor.
That makes sense. So essentially, if something is listed on, say, Euronext, I believe Euronext is Amsterdam, they would have to come and list on the LSE for UK retail to be able to get access to that, and only if it's Bitcoin or Ethereum.
Exactly. So Euronext, you have Euronext Amsterdam, Euronext Paris, you have Xetra, which is the Deutsche Börse. So in Frankfurt, you have SIX in Switzerland. And so what we're actually doing is we're cross-listing products. So our products are listed on all these venues, and then including London Stock Exchange. But the brokers in the UK will only be allowed to offer LSE listed products, and LSE determines as I mentioned earlier, quite rightfully, they determine which products should be available on their venue. And so far, they have only got allow Bitcoin and Ethereum. That doesn't mean they won't open up to more products in the future, but you shouldn't create rules that favor a single venue or a single private entity. If the purpose of the FCA is to protect the consumer, then they should be ensuring that the consumer has fair and access to the broad range of products. Otherwise, the consumer just goes and finds that exposure in another way. Like they go to these trading platforms, many of which are offshore, and access it that way.
Yeah, absolutely. I mean, if people can't access Bitcoin or whatever it is that they want, Solana, Sui, whatever it is, they are going to be forced to go to offshore, unregulated exchanges like Binance or Kraken or whatever it is
Yeah.
to buy these things, and that is technologically very difficult, as opposed to just buying it within your ISA, or even indeed asking your financial advisor to buy it within your ISA. And there's still some there's technical difficulty with that, to actually get professional guidance on crypto ETNs.
Yeah, 100%. I mean, why did so many UK investors lose their money in FTX? Because they didn't have regulated products that they could go and invest in, because they were not allowed in the UK. Now, I'm not saying that every exchange or every online platform is bad, but at a very minimum, they carry a high cost, so a high trading cost, and you have a risk element where you're storing your crypto on the exchange. I would not want to do that myself.
Yeah, not your keys, not your coins, right? So absolutely don't store anything on an exchange that you wouldn't feel comfortable losing, setting fire to at the bottom of your garden. If it's going to be painful to lose it, look into cold storage, get it off there yourselves. But I hadn't realized, and thank you for sharing this, I thought it was the FCA that had said only Bitcoin and ETH, but no. So the FCA have in theory lifted the ban on all crypto ETNs, but then they've said you have to go and use essentially this monopoly, which is the LSE. You can't use anything else globally. And it's the LSE that have said we will only allow Bitcoin and Ethereum. I didn't realize that. And why do you think the LSE have said that?
It's first steps. I'm hoping they're taking baby steps towards it. If I'm honest, I don't know. I mean, it's possible that the UK domiciled exchanges had a part to play in helping shape the consultation in the first place. I mean, if the FCA is doing it well, they should be engaging with industry participants. So I'm hopeful that it's just the first step to opening up. They didn't call out LSE only. There are other venues in the UK. It's just who is offering products. You know, SIBO is also in the UK, but they don't offer these types of products now. Aquis is there. I think it's a pretty limited offering, and so the LSE is the only credible major exchange in the UK.
I see. Okay, so there are others. So Aquis could do this if they wanted to. They're just choosing not to.
But they just don't have the connectivity to the brokers. They're more of a professional and structured products market. So
I see. Okay, thank you for that. Let's talk about the 21Shares ETPs. So you guys do have Bitcoin and Ethereum ETPs. How do they work? Why might they be interesting to retail? And also, why might advisors, this is an IFA focused podcast, why might advisors be interested in them?
Yeah, absolutely. So maybe the first thing is to kind of address a little bit of a myth or a misunderstanding around the products, because if you go onto Google and you search ETN, if you're in the UK, it's going to tell you that an ETN is an uncollateralized debt instrument. Now, it is a debt instrument, so it's a promise to pay something, like a bond, but it's not uncollateralized in our case. Our products are issued from a Swiss company. In Switzerland, we are required to be 100% collateralized.
Just so we're clear, that means that you hold the underlying asset. So if they're buying
one for one. Yeah.
Okay. So if they're buying one Bitcoin or whatever it is within your ETN, that Bitcoin exists somewhere.
Exactly. Yeah. Someone buys £1 worth of our product, we will buy £1 worth of Bitcoin and hold it with a regulated custodian. 21Shares was the first in the market, and it's still one of the only that does multi-custody as well. We split assets across multiple regulated custodians. Just another safety measure in ensuring safe custody of the assets. And then the product, as I said, is a promise to pay the return. So we deliver the return of Bitcoin to the investor by holding that Bitcoin in custody, and we don't want to take any risk there at all that there'll be any variation from what we are offering and what we hold in custody. And then, in addition to those regulated custodians, we work with the best in class service providers outside of that. Importantly, the best market makers who are creating liquidity on the products. So I think last time I looked at it, for in Europe, so we have about 50 products available in Europe across the market. We have the tightest spreads, so the lowest cost of trading on something like 93% of all products. So our market makers and the deep liquidity that our capital markets team are able to source is a big value add to investors. And that cost of trading, that spread is not something that people often think about when they think about the cost of a product. They only look at like the management fee or the expense ratio, but you really need to look at the total cost of owning something. And it's true that we are also the cheapest on the expense ratio side, but on the spread as well, we're the tightest.
Okay, that's great. Yeah, that should be very interesting to financial advisors and good for them to know. Do you know how they're able to access you at the moment?
Yeah. So you'll be able to go through your any broker, or if you already work with market makers as well, anyone that's connected to London Stock Exchange, you'll be able to access it. Not all brokers are going to offer the crypto ETNs initially. I think some fairly big one, Hargreaves Lansdown, said that they would start next year. But there's probably a list of 7 or 8 large brokers that will have already announced day one that they are going to offer it. But like I said, yeah, if you are also, depending on the size of the group, if you're connected to any of the big market makers or banks, then they'll also be able to provide access. And so that means that people can get exposure to crypto in a traditional way, right? Like our business was created in 2018 with a view to connecting the crypto world with the traditional finance world and making investing in crypto as easy as buying a stock. And that's what we do.
Well, now the ban's been lifted. Hopefully that's the case.
Yeah.
I'm just thinking. So in the financial advice world, typically people will advise on a fund rather than say individual ETNs or individual commodity ETFs or ETNs. And so the FCA, in lifting the ban on the 8th of October, have essentially said the pension trustees can include these crypto ETNs within their funds, within their offerings, both DB and DC pensions. Are you having any conversations with any of those larger pension trustees, pension funds, pension portfolios? Are those conversations happening in the background?
Yeah, they're just starting, and also through the consultants as well. So, and I actually think the consultants will be, have a big part to play here. It's true that it might not look like doing, investing in a fund. It is a structured product at the end of the day, but the same level of due diligence can and should be done on an issuer as you would expect to do on an investment manager. I mean, we have all the same. I come from the traditional asset management world, and we have all the same teams here as we would have had back at Aberdeen. So I'm expecting for these groups to do the same level of due diligence on us as they would on any fund manager for any product.
Thank you for that. We've touched on the cost and custody risk. One of the things that financial advisors or certainly people that are anti-Bitcoin, anti-crypto will say is that it's illiquid. So how are you, if someone were to come to you and say, what about the cost? What about the custody risk? What about liquidity? How are you addressing those questions for, say, UK listed ETNs? Hey team, a very quick pause. If you're a financial advisor, wealth manager, or accountant, chances are your clients have already asked you about Bitcoin. And if they haven't, they soon will. which is why I've created the Bitcoin IFA webinars. The webinars are designed to give you all of the information you need to confidently talk about Bitcoin with your clients. They're on demand, so you can watch them at a time that's suitable for you. They count as 90-minute structured CPD, and you'll get priority access to the Bitcoin IFA community. Head over to the bitcoinifa.com to book your webinar today. It takes less than 60 seconds. Again, that's the bitcoinifa.com to book. Now, back to the episode.
I mean, it's absolutely not true. I mean, the Bitcoin trades typically around about 75 to 100 billion dollars a day in liquidity. The product liquidity can be even better than that. So the actual ETPs, because we can net trades, or our market makers can net trades as well. So the liquidity on a Bitcoin product and even Ethereum is very, very, very deep. Just to give you an idea, like we already have, and maybe 21Shares more than others. We definitely probably punch above our weight here in terms of hedge fund flow. We already have a wide range of hedge funds and proprietary trading desks from banks and market makers as clients who are able to move 300, 400, 500 million dollars a day in and out of our products. So I don't see any kind of liquidity risk in these products, relative to any traditional asset that your listeners might have exposure to.
Absolutely. I would 100% agree. So you're absolutely correct. So Bitcoin trades 24/7, 365. There's a great stat that I like to use in my training, which is since 1971, the US stock market has traded 100,000 hours. And we use 1971 for two reasons. First, it's when we came off the gold standard. But secondly, that's when the NASDAQ was launched. Mm-hmm. So the NASDAQ has traded roughly 100,000 hours in 54 years. In 15 years or 16 years, Bitcoin has traded 140,000 hours. So it's traded 40% in a decade and a half than the NASDAQ is in total in 5.5 decades. So this thing is totally liquid, as proven by the fact that Bitcoin trades over the weekend. So quite often we get large movements over the weekend because that's when the market makers aren't live, or when TradFi isn't live. So it can go up or down, obviously, but there is that liquidity at the weekend, and it is something that people can go and grab for liquidity. So when there is, say, bad macro news over the weekend, sadly, Bitcoin will be the first to get affected because people will go grabbing for liquidity wherever they can. And with Bitcoin, they can do that on a Sunday night, preparing for drops in the market on a Monday. That's probably where I think we're going to go long term. I think the NASDAQ announced fairly recently that they're looking at 24/7 trading from Monday morning to Friday evening. And I think that's coming relatively soon, right? 2026, I think they said.
That's pretty exciting. Like that's that's going to be, that's a big shift. And the settlements getting shorter as well. I think it will be. I'm not convinced everybody wants to move to 24/7. I think people do want a weekend. But 24/5 and the NASDAQ will be huge. And it's true, because crypto is 24/7, you do have this weekend market movements and sometimes volatility. We just had, this weekend has been very interesting, just post the Trump announcement on the China tariffs. Additional China tariffs caused volatility, but just coming back to that idea of liquidity, Bitcoin markets operated normally through this enormous bout of volatility that happened through Friday evening and Saturday. Bitcoin, although the price fell, if we actually look at like what was going on in terms of did liquidity become stretched, we didn't see it at all. I can get into the technicals, but like basically the cost of going long or shorting just basically stayed in line with historical numbers, which tells you that liquidity was very strong, very deep.
Yeah, it was certainly a very interesting weekend in the crypto markets. Well, I'd say weekend. It was more Friday evening for us, Friday afternoon for the US. And it's actually something I'm going to challenge you on slightly here, which is, this is the Bitcoin IFA podcast.
Yeah.
Bitcoin was relatively unaffected for Bitcoin, right? So we saw a 10% drop in Bitcoin. But some of the other cryptos and some of the actual other larger cryptos, certainly some, within the top 20, saw 80 to 90% of their value, their price wiped off. And then, some have recovered to an extent. What are 21Shares views on this? Because you do offer the ETH ETN in the UK now, and I assume in other jurisdictions you are offering other ETNs for XRP, Solana, SUI, I assume.
Yeah.
So what is 21Shares view on Bitcoin versus crypto?
Yeah. So I mean, the way we see cryptocurrencies in general is it's an investment in technology. We see that this is really very early stage technology investments across the board, and the technologies have different use cases. Bitcoin is very clearly the most mature of those cryptocurrencies, and it has a pretty well-defined use case or future use case, which is as a store of value. Now, some people might believe it, some people might not, but certainly the amount of institutional buying that's going on is setting Bitcoin on a path to achieve that. With the other technologies, we don't know yet. With the other cryptocurrencies, Ethereum is the most established of those, but it has challengers such as Solana, for example. And we should expect, when you invest in early stage technology, you should expect volatility with that investment. You mentioned the kind of, I guess, price return of these altcoins relative to Bitcoin at the weekend, and some of them saw pretty steep declines. It was of the top 20. It was isolated to those sort of 80-90%. I actually can't think of one that went quite to that in spot prices. Definitely didn't in futures, on perpetual futures. But Solana is of the large ones, saw one of the largest declines of 40%. And for our team was working over the weekend, looking at the markets, trying to put together some content to educate investors. We published yesterday a note on what went on. There was we do have these trading platforms that operate over the weekends as well, 24/7, and there was some cross margining of positions, so of leverage positions, and people were using, let's say, profits that they gained on their Solana trade as collateral for other positions. Well, if those positions go against them, that Solana collateral gets wiped out and sold. And we actually saw some pretty big short positions develop on Solana. So earlier on, when I was talking about how deep liquidity had been in Bitcoin and how the funding rates had traded within the normal range, in Solana that moved aggressively negative, which told you that basically that means that short sellers are willing to pay long holders a lot to be short. So there was large short positioning, and that's come back a lot. But that was on an asset that had performed very, very well. I mean, the summary of this is we don't yet know which ones are going to be the winners in the future. Solana is still, despite that sell-off, is still a very robust asset. It has a huge community of users, of developers, of builders on the technology, and it's been through much worse situations in the past. It was caught up in FTX, for example. I think that at least for the bench that we have, we've got a list of assets and products that have been through our research due diligence process. It's something that we're constantly assessing, and we feel comfortable with the position that those companies are in today.
Yeah, I think I would be inclined to agree with what you've said there, which is I like to describe it as Bitcoin is essentially analogous to digital gold. Most of the layer ones, so layer ones being Ethereum, Solana, Sui, XRP, I think is a layer one. They're more analogous to VC-backed tech startups.
Yeah.
So if you think back 20 years, you could have said with some certainty, gold is going to be worth a lot of money, but there was no way you could have predicted the Mag 7. So, Apple pre-iPhone in 2007 was, it wasn't really that big. Microsoft was still selling people one-off payments to Office. They hadn't gone to the recurring revenue model yet. Tesla didn't exist. Meta didn't exist. Amazon and Google were emerging, but we couldn't have predicted, the sort of monopolistic positions they were going to hold. And Netflix was still posting people DVDs. So at that point, you would have had an index fund of all of the global equities because you can't predict which ones are going to win. Mm-hmm. But you could have said with some certainty that gold was probably still going to be worth a lot of money 20 years into the future. And that's the way I view it today. 20 years from now, Bitcoin will probably make up a very large portion of your crypto portfolio and will be worth a lot of money. Some of the other ones will win, but I can't tell you which ones that's going to be 20 years from now because the technology keeps improving.
Yeah, and likewise, neither can we. We actually so we had this view when the company started. We had this view that people would want to buy, and they wanted to buy cryptocurrencies, which was validated because we had large inflows. But they didn't know which ones they would want to buy, and so a basket would be the best solution for them. So the first ever product we launched was a basket product, top 5 cryptocurrencies. It's still around today. Unfortunately, we obviously cannot offer that to UK investors because of this restriction on from the LSE on which assets are eligible. But I think a basket product for the UK market would make a lot of sense. And I agree that I think the Bitcoin is here to stay. Where Bitcoin and where other cryptocurrencies fit in a portfolio today and in the future, I think will change as well.
Yeah, I'd be inclined to agree. How would that basket product, what would it look like? So in terms of, would you just weight it based on dominance, for example?
Yeah, so we have several now. So we have top 5. I mean, you really have to always consider liquidity in here. So while you might want, let's say, a simple equal weight, you cannot do an equal weight on when it's got a large range of assets in there. The liquidity just doesn't exist in some of the smaller cryptocurrencies. Dominance is a good one. So that has a little bit of a momentum type effect to it. We would like to offer, and in Europe we have one called Future, which has up to about 27 different cryptocurrencies in it, where they're split out by different use cases in different categories. So that's more like an MSCI World type thing where you've got different sectors. We developed one of the first classification standards for cryptocurrencies, and I think ultimately that's the way it should go. I'm a firm believer in the use of blockchain and how that will impact not just financial services but industries on the whole. I sit on the board of one of the layer ones in that top 20, and I see how enterprises are using the technology to improve their operations. And in the future, these different cryptocurrencies or the underlying blockchains that they are based on will be used in different sectors depending on the characteristics of that technology. So some of these blockchains have stronger security than others. Some are cheaper to use than others. Some are faster to use, and there are trade-offs between these different elements that will make them more appropriate for some industries than others.
Yeah, I completely agree. And actually, I heard recently, don't trust, verify this for yourself, but I'm fairly certain I heard, well, I definitely heard this. I don't know how true it is, but it's super interesting, which is, so if we go into my understanding of the differences between, say, something like Bitcoin and Ethereum. So Bitcoin is essentially a digital contract. I send you a Bitcoin and that is settled. That's a digital contract that's settled on the blockchain. Then Ethereum came along and said, well, we're going to do a smart contract. So if X, Y, and Z conditions are met, then I will send you one Ethereum, for example. And so that there's the iteration in terms of the technology. And then, you've got many more on top of that. And during COVID, I heard that a lot of commodity trading moved quietly onto the Ethereum blockchain because a lot of countries where commodities come from have a history of reneging on deals. So essentially, they just moved all of that, or a bunch of commodity trading, onto the Ethereum blockchain and said, you will only get paid via the blockchain if X, Y, and Z conditions are met. So, i.e., you give us the commodity, you ship it to us, it arrives, whatever that looks like. Then it will just get settled immediately at the speed of light, as long as those conditions are met. Is that the kind of thing that you're alluding to? Have I got that wrong?
No, you got it spot on. I mean, the trade finance is one of the great use cases of for blockchain, or being able to ensure that the one party will pay the other if something happens, and having a verifiable record of it is extremely valuable. We also see payments as a big one, just faster, cheaper payments. Payments is probably the killer app for blockchain today. It's probably the one that's been focused on the most. Obviously, all the banks are getting involved in it, but also supply chain tracking. So if you're a consumer goods company, you want to track the efficiency of your supply chain and see where the products are along it. And maybe track things like carbon footprint of those products. The blockchain is an ideal solution for that. Digital identity. I mean, if you're in the UK, I'm Scottish. Hopefully that's obvious by my somewhat watered down accent now. But if you're in Scotland and you move to England or London, as I did, the health records don't come with you, right? They're on like paper. And they can be lost. And I don't know how many times the history of my health records were lost when I moved around the UK. I live in Switzerland now, and they certainly didn't make their way over here. But it's possible to store those on a blockchain and have them accessible only to you or anybody you give the key to access them. And then it belongs to you. It's like these are and you avoid things like Australia, for example, has had there's been private healthcare companies there. They've had numerous data breaches where health records have been stolen. And these are solutions to blockchain is a solution to these sorts of problems.
Yeah, I mean, I hadn't even thought of that one, but that's a great example. I was thinking more like home ownership. Like, why do we? I mean, I assume it's no longer a piece of paper, but it may be, given the speed and bureaucracy of the UK. We just have a piece of paper at the land registry that says this piece of land and house now belongs to me, and I stamp it to say that. And by the way, you pay 2% or whatever it is just for that stamp. Why is that not on a blockchain?
And it takes 6 months to update. So land registry have been working on a blockchain project since I think 2018.
Wow.
And it's not concluded. I completely agree. Other countries have, if you're in the Middle East, that's already happening. Even rental contracts, even in some, the United States is not known for its advanced, infrastructure. But even in places like New York, we're now seeing tenancy agreements on chain. In Switzerland, we can get credit checks done on chain. And so for your rentals, for example. So I completely agree. Homeownership is something that should absolutely move on to blockchain and soon.
Yeah, home ownership, car ownership. I mean, I didn't realize they'd been building their own blockchain for 7 years, because
I said working on it. I didn't say building.
Okay. I mean, because from my understanding is, if you're a fairly decent cryptographer, you can spin up a pretty decent blockchain in a week, a month.
It's the pretty much most of them are open source, or at least partially open source software. So replicating a private one in a private instance is very straightforward. I think what you want to do is to build it on a public blockchain so that it increases the accessibility and the interoperability. That does require more work. But the reality is that all of these outside of Bitcoin and to a degree Ethereum, they're all set up as companies. All of these cryptocurrency firms and blockchains, they are companies. They have overheads, they have revenues, they have resources and people, and they have business development units that are designed to work with companies on these solutions. So the help is there if anybody wants to go and get it. They're all eager to work on these projects and for that business.
Super interesting, Duncan. So with the ETNs, CETNs having now been allowed, do you plan to engage IFAs and wealth managers who have been historically skeptical? And if so, what does that look like?
Hey team, just a quick pause to say a huge thank you. You've given us your most precious assets, your time and your attention. And honestly, it means the world to us. If you've enjoyed this episode or you take value from these conversations, it would really mean a lot if you could like, comment, or subscribe. Those things really help the algorithm and they help the channel to grow. And if there's someone in your life who would take value from this, maybe a fellow advisor or someone just curious about Bitcoin, please send it their way. You never know what it might spark. Okay, back to the studio.
Yeah, we definitely do. I mean, we've been very successful in Europe in the wealth community. So particularly in Switzerland, and also partially in Germany and Italy and Spain. And I think the UK market opening up is probably the biggest opportunity we have in Europe today. So we're definitely planning to engage with IFAs. We want to provide first and foremost education and content that helps people understand why they should invest in something if they're considering it, what the risks are, the ways that they should think about it, and how much they should think about allocating within a portfolio. So a lot of what we do is providing this content and education. Either it's through published material or through webinars or in-person teach-ins with our research team and our capital markets team. And so we've got a lot of work ahead of us, I think, to do that in the UK because it's such a big market. But we're certainly eager to begin that work. And we don't expect this to be an overnight, success. Certainly, I think this is going to take time to be able to build comfort in what in the asset and the products. But we've been going for 7 years already, and we're here to stay.
It's interesting. Have you seen any difference between, say, the skepticism in the UK versus Europe, and with the FCA having been so skeptical and the LSE being so skeptical? I think the City of London are relatively skeptical about this new asset class. Do you think that influences, if you have seen any difference, if the UK, for example, is more skeptical and slower to use this new asset class? Do you think it is being influenced by those large organizations, bodies that are, very publicly skeptical?
I think it does. Even if there's no ban, just a degree of skepticism from the regulator does have an impact on how, in particular, the larger larger institutional investors behave. I can give some examples. So in Italy, it's possible for Italian investors, institutional and retail, to invest in cryptocurrency ETNs or ETPs. They can do that through the other European venues even know that Borsa Italiana, the stock exchange there, does not offer them. But because the regulator has been more cautious, those investors themselves have not gone in as much as we've seen, let's say, in Germany, where the regulator has been very supportive. And it's it's our largest market today, Germany. So it does have an impact. I think at the individual like IFA level, it's possibly going to be less so if it's very client driven, and we see a lot of client driven flow in Europe as well, where there may even be pockets of skepticism. Private banks is a good example of that. Some of the private banks will only do execution only, but we still see a lot of business from them because their clients themselves want to invest. So it's hard to predict today what the uptake will be. We know that there's a lot of demand from retail. We know that the digital asset treasury companies are highly traded on the platforms because that's what people can get access to today. So on the broker platforms, and we know that there was a lot of demand following the announcement around the US ETFs that launched last year. That's the most successful ETF launch in history of all ETFs. And because of the way the media covered it, UK investors were calling up their brokers asking to get exposure. So we know that there is demand there. But with the IFAs, it may take a bit more time.
Yes, I'd be inclined to agree. I think there is, well, Aviva released a study earlier this year. 21% of UK adults have owned some form of crypto, with about 50% of those owning Bitcoin, which means about somewhere between 10 and 11% of UK adults own Bitcoin. 9% of UK adults took professional financial advice last year. So Bitcoin ownership is Bitcoin ownership is more popular than professional financial advice in the UK. Wow. So just Bitcoin, and crypto ownership is 2 to 2.5 times more popular. So yes, I think you're absolutely correct. The demand is there. It's just a question of whether how skeptical are the IFAs, and are their minds going to be changed? Where are they in their life cycle? Where are they in their business cycle?
Yeah.
We have the average demography of the IFA in the UK is a 55-year-old man. They've probably built a very successful business over the last 20 years and are looking at sort of aging out, retiring, selling their business over the next 5 years. So they probably don't want to do anything that rocks the boat when they've seen headlines around volatility and illiquidity and et cetera, whatever the false narrative is that we're dealing with at the time. So I think it's going to be a very interesting challenge.
Yeah.
There is a huge opportunity for you, but I think it's going to be a very, very interesting challenge, huge opportunity for all of us in this space. But yeah, very interesting challenge. It's not going to be overnight. I think we could be looking at somewhere between 3 to 5 years when the advisors that start recommending Bitcoin exposure now, even just small 1 to 2% exposure now, 3 to 5 years from now, I think you and I can both agree they're going to see significant performance in their portfolios as a consequence of some Bitcoin and crypto exposure. Yeah. They will start to win clients and staff from those who don't. And I think it will be a slow burn. But in this community, we like to say gradually, then suddenly. And I think it will go like that. The dominoes will start to fall, and then suddenly all of them will need to get on board. It's just a question of when rather than if.
Yeah, that makes a lot of sense. And the reality is that if you're nearing retirement, let's say, putting a risky asset into your portfolio may not be the right thing to do, at least in size. And so it's not going to be for everybody. I do think that the timeline that you mentioned, so let's say 3 to 5 years, we're going to continue to see the volatility of Bitcoin come down. So you're now looking at an asset that's got volatility in line with most tech stocks. If you go back a few years, it was double that. And so I think as there is broader adoption across the industry globally from different market participants, we will see that volatility come down further, and that's when it can be a larger part of a portfolio anyway. The other cryptocurrencies, it will depend on the success of the underlying companies in the blockchain, but there are a few already we've seen their volatility start to come down over time, as they've seen more adoption.
Yeah, the volatility thing is a very interesting one. It is. I show in my trainings, there's a Fidelity study that came out last year that shows Bitcoin was less volatile than almost 20% of the S&P 500, and it sits somewhere in the Mag 7. So it's certainly, I think it's Meta, Tesla, and one other that it's less volatile than those shares. And the exposure thing and where they are in their life stage, I actually think is very interesting, because I think it fits everywhere in the life stage. So
Right.
even for those approaching decumulation or retirement, and those in decumulation, I show stats that if you'd have held your portfolio in cash since the 1st of January 2020 to the middle of August this year, so I used nakamotoportfolio.com if you know it, and if you'd have held 90% in cash, returning 3% a year in interest and just 10% in Bitcoin, it would have returned 158%, which is 18.55% per year.
Mm-hmm.
So just keeping 90% in cash, safe, but melting through inflation, Bitcoin in a very small percentage of a cash portfolio outperforms almost every fund on the planet.
Yeah.
And so I think for those in decumulation, that could be a really useful tool where you say, look, we're going to sell 2 years worth of cash to ride out any short term, or 2 years to cash. So, you need 10,000 a year from your pension. We're going to sell 20,000 into cash and just hold it in your pension. You're just going to take it out each month.
Mm-hmm.
To ride out any short-term volatility, to ride out, whatever, just to provide you that safety net. And then what we're going to do is just keep a small percentage of that directly in Bitcoin. So, we're going to sell, in that example, let's say they need 12,000 a year, 1,000 a month. We're going to sell 24 grand to cash, but we're going to keep 1,000 of it in Bitcoin and see where that ends us, 2 years from now. And I think in that example, it doesn't matter where you are in your life stage, you can have some exposure to Bitcoin.
That makes
Like that.
sense. Yeah. I mean, we look at it and like what would this look like in a sort of a general typical multi-asset portfolio, and we do find that adding Bitcoin in there will to, let's say, a 60-40 increases the Sharpe ratio, and does not materially increase the volatility. I mean, maybe a fraction. Interestingly, adding a second asset furthering enhances the Sharpe ratio. So this validates that the not all cryptocurrencies are highly, they're relatively highly correlated, but there's a less than one correlation across them. So you add, let's say, Ethereum in after Bitcoin, and it does something a little bit different, and so it increases the Sharpe ratio further.
You're singing my language very loudly. I show a lot of those stats again from Nakamoto Portfolio in the trainings, and yeah, you're absolutely correct. Small allocations to Bitcoin, significant increases in the Sharpe ratio with almost imperceptible changes in volatility, especially if you're rebalancing annually as well. So it's you're absolutely singing my language. I would love to continue this. We're out of time.
Right.
Final question, Duncan. It's the question we ask everyone. I'll slightly change it for you. So what is one positive thing that Bitcoin/crypto has brought to your life outside of number go up?
All right. Well, like I'm not just let's say a Bitcoin maxi. I believe in the technology, and so what Bitcoin's done for me is, because it was the first asset and the first blockchain, it's brought me into this industry that's helped me understand the true value that can come from the technology. So it's had a huge impact on my life, my career, but also made me very positive about the improvements that can be made across the companies that I work in, and across industries that I genuinely that I think will have a positive effect on society as well.
It's a great answer. Duncan, thank you.
Thanks, Dan.